Hello traders, now we are going to look at a candle that happens after a share has been going upwards. In other words, the share has been in an uptrend. So this is a candlestick that you expect to find at the top of an uptrend. If you see it in any other type of trend, you can ignore it. You're only looking for it when the share price has been trending up and you see this candle up here. It is called a hanging man. So, for example, the price has been going up maybe for the past 4 weeks. Then suddenly you see a hanging man at the top of that trend. It can either be green or it can be red. What you can notice as well is that a hanging man it looks the same as a hammer. However, the difference is that a hammer occurs at the bottom of a downtrend and the hanging man occurs at the top of an uptrend. So that's what you need to know to differentiate these two types of candle, but otherwise structurally they look the same. So what does a hanging man signify? Well, consider that the buyers have been pushing the price of a share upwards in a trend. Now suddenly you reach a point whereby the price has moved up in the case of a green hanging man. However, you can see that the sellers or the bears pushed the price down all the way to the end point of the week. This shows that there is a lot of domination by sellers at that level. And you can also see that previously the buyers or bulls were able to buy without much opposition from sellers. So this can tell you that the uptrend is coming to a halt and you do not know where it's going to go next. A hanging man can also be a red hanging man, meaning that the opening price is higher than the closing price. Now, of the two at the top of an uptrend, you are going to favor more a red hanging man because it shows you that at the end of the day, the sellers won the day and the buyers lost. For a green hanging man, it shows you that the buyers too won the day. So what does this type of candle mean? Well, if you had bought your shares and they were in an uptrend and suddenly you see a hanging man showing up, now you're going to look for the confirmation. The confirmation usually has to be any price trading below the closing price of the hanging man candle. Alternatively, it can be below the wick of the hanging man candle. So when the price reaches that zone of below the candle or below the wick, then if you had bought the shares to hold or you had bought the shares to make some profit, this is a signal to show you that the price is about to trend downwards and it can actually wipe all your profits that you would have made going up. So this can signal to you that it is time to cash out and keep your profit. Now, for those who do what we call short selling, that is, you are borrowing shares to sell at a higher price, then you buy back and give them back at a lower price. When you see a hanging man, you can be on the lookout now for an opportunity to enter a short position. If the price starts trading at the lower part of the candle or the lower part of the wick, you can enter the market because it represents a situation whereby there is low risk in terms of entry and there's a high probability of you being rewarded by the price continuing to move downwards for a sustained level to give you enough profits. So this is a hanging man candle. You ought to look for it at the top of an uptrend. Sometimes it can develop, then the price refuses to go below the setup, then it can continue upwards. So this is why confirmation is always important to see the exact direction of where things are going to go. Thank you. We'll look at another type of candle after this one, which you have to see at the top of an uptrend.